Hello everyone, this is Jim from the Art of Finance. We are opening the week. Alright, we are on 8th of November and we are starting a new week today. So what can we expect? Like what's happening in the market? We will just cover in this video these news, what happened yesterday. We will talk about some about them. So on last week, let's start with on last week. And on last week, on Friday, we have received non-farm payroll data and unemployment rate. Unemployment rate fell as expected, and non-farm payrolls and risen as more than expected. So they have been released, and the expectation number is 450, and then release data is more than 500,000 people have found new jobs. That's important. That's important. And we have seen these. We have seen these numbers. And these affected the market, especially the dollar index, on a positive way. But the resistance level has just stood in front of dollar index. Let me just get closer. This level of dollar index already highest level since the pandemic, since the beginning of the pandemic. So they said actually the chart and then the numbers just said, all right, it's good data, but still we are already on high level. Then from that resistance area, it just got rejected. At the same time, something strange is happening. 10 years bond in US bonds are on the fall. Last week from 157 and they just dropped to 145, 6-week low, and this morning they just start to move some, and we are seeing that they are recovering. With that recovery, and we see decline in gold as well. All right, what we can expect is weak dollar index. All right, we have inflation data and then most fearful data for dollar index, because on inflation side nothing goes well. Tomorrow PPI will be released on US on Wednesday. There will be inflation rate and core inflation rate. These data are the most weakest data dollar index can get these days, because we know already the bottlenecks in US are not solved, and there are a lot of problems regarding inflation. So probably we will receive really high level of inflation, and that will push dollar index on lower levels. If we just see that one, then we may see euro dollar on rise. We can just do that one, and GBP USD as well on rise. It will be like that. Tomorrow and Wednesday is critical for dollar index. Let's look at what's happening in gold.
You are ready to win with us, Gann Markets.
All right, we are on gold chart. As you can see here, as we have mentioned on previous chart, with the declining US 10-year bonds, gold is rising, and right now it is just can't go further. At this point, US 10-year bonds start to rebound, and we are seeing that gold is right now just stopping, because okay, it has rising so fast in just 4 hours from 1790, yeah, 1790, and from that point to 1820 area. So the target of gold with yeah, if you just see the stable this level of US 10 bonds, if it doesn't rise so fast, And if we see really high number of inflation, then we will definitely see it will try 1832, and then we will see it will just go high or not. But right now it's that one. If we see just like sharp decline, if we see a sharp increase in US 10-year bonds, then we will see a sharp decline in gold. That's why please just watch carefully. US 10-year bonds are critical for gold these days. All right, let's look at in USOIL. And on the fall, the first support will be 18K levels. On that level, we will see a struggle, a support for gold, just like this, just similar to this one. If it just go further, it may test 1790s, 1782 area can be seen as well. All right, let's look at oil. All right, we are on oil chart. And oil has just made a rise on these days after OPEC Plus meeting just said that on the OPEC Plus meeting it has been said that we are not increasing oil production. That was a good news for oil price hike, but at the same time, on a long term, it's not that good because everybody is just expecting $75 oil is good for its price because it won't trigger that much inflation. Rising energy cost is triggering everything, especially in China and US. These guys are tough guys. Let me just explain this one. For example, China has bought almost all the oil production when it is $10, $15. They have really cheap emergency reserves, and they have used some of them at these levels, like when it just reached to $80 in spot price. So they have started to use that cheap oil to just control the prices. So if oil tries to go further again, they will use that oil reserve, emergency oil reserves, because just imagine like you have oil which you have bought for $10, $15, $20, almost like just a quarter price of this current price. So they may manage this one, and then they may import less. We have seen this one on October. They have imported less, and it was the lowest. October in 10 years. This was happened. Domestic use is getting less in China because a slowdown is happening. At the same time, they are using their emergency oil reserves, which they had bought on pandemic. So these may be the final stage. As you can see here, it is already, the price is already on just not moving that fast, just going up and down, and at some point we may see a sharp decline on these circumstances. So please just be careful, because it is getting away from its high levels, 85 area, and then getting closer to support area. Just be informed about this one. Alright, thank you so much for watching us. We will be together on afternoon analysis with you. Have a nice day. Bye.